Right. What's going on, guys? So, we are going to talk about 48 North today. I'm sorry I don't have my face on the computer. It is giving me a lot of problems, so you won't be able to look at my pretty face today, but I will try to make my next video on my laptop. My laptop's just not really being cooperative, so I chose to make my video this way because I wanted to put out some content. I've been sick the last week, so I haven't put out any videos or really been doing much. Sorry about that. Anyway, today I want to talk about 48 North. It's going to be my stock pick of the week. So what I want to talk about 48 North is a few things. The first thing I want to talk about is their 2 licensed facilities. So they have 2 licensed facilities currently operational in one in Brantford, a 46,000 square foot facility in Brantford, and they also have a 40,000 square foot facility in Kirkland Lake. And this is the Delshin Therapeutics facility. And through their facility in Brantford, the Good House, they have a contract manufacturing and supply wholesale agreement to not only produce flower, but also produce full spectrum oils, distillates, and isolates. So they are diversifying their portfolios, and they are looking to go into the oil and other types of markets that you can use distillates and isolates, such as the edibles and the beverage markets, but they haven't made any announcements for edibles or beverages. It's simply just into the oils for now, but that will be a large portion of what they're focused on is simply dried flower and oil, which is not a bad thing to be focused on. Gives them a lot of diversification, but also keeps them solid in terms of producing high quality products. Instead of diversifying to, just produce hundreds of products, they'll produce 10 or 20 very, very good high quality products. So the biggest thing that you want to know is that these 2 facilities are pretty good. They're going to be producing about 5,000 kilograms. And right now, in terms of 2019, they will be producing 2,500 kilograms apiece. So together that'll be 5,000 kilograms of dried cannabis that they will be looking to distribute through their agreements. And they have agreements with Alberta, Quebec through the Société de Quebec, and through the OCS, the Ontario Cannabis Store. So they are selling through the most populated provinces, and they have agreements with the OCS and the SQDC, which are 2 of the most important licensed retailers in which you want to be selling your cannabis, because they have the largest consumer bases. But it doesn't necessarily mean you're going to do well or that these are the best places to go. It just means that they have the most people, so you have a large market share. But anyway, they're obviously going to be producing for not just Ontario, not just Alberta, not just Quebec, but for the entire country, and probably internationally once they get fully operational. As I said, out of their 2 indoor facilities, they already have recently shipped 120 kilograms to Quebec to meet their first agreement with the SQDC, and that will be out of these 2 facilities 120 kilograms, and that will be their first major shipment. So currently they are only producing dried flower, and they have these various 2 sativas and 1 indica, and they are already being sold, or they have already been shipped to Quebec and are being sold in Ontario. So the other big thing to mention, and that's kind of the big announcement that they had just made, is that they have been approved for their outdoor license facility known as the Good Farm, which has been the first publicly traded company to be approved by Health Canada to open up an outdoor licensed medical and recreational cannabis production facility. So this outdoor growing facility or farm will be one of the largest and one of the earliest to be approved cultivation facilities, outdoor cultivation facilities in Canada. So it will give them a leg up on the competition, and it will allow them to produce some of the cheapest products in the country, and that is something that they are branding themselves on. They claim that they will be able to produce cannabis at 25 cents per gram, which in comparison of the average grown cannabis which is around $2 a gram, and the average greenhouse grown cannabis, which is around 90 cents a gram. This is 4 times cheaper than the average greenhouse grow and 8 times cheaper than the average indoor grow. So it just shows you why they plan to utilize this outdoor cultivation facility, the Good Farm, to give them cheap cannabis production that allows them to outmatch their competitors in terms of price per gram and in terms of how much they're able to cultivate in their outdoor facilities. That will enable them to build market share and build up their debt to profit ratio very, very quickly, a lot quicker than a lot of other brands who are, stuck providing or growing at these rates, which are, I would say these are actually very low estimates. And plus there's a ton of other issues that come into indoor growing that you need to consider, and there's a ton of costs that come with indoor growing, and all of the things that entail, watering and all of those things, whereas you still need to water outdoor, but you can also rely on, rainwater, which does provide an extra incentive and an extra cheap, allows it to be that much cheaper because you don't have to just water every day. If you have like a straight week of rain, then you can a lot of times not have to water your outdoor facility or outdoor farm plants, which means that you're saving that water cost and the electricity cost and all of those costs, the heating costs, whatever costs you want to talk about. Indoor cannabis grows are extremely expensive, and this is why 48 North plans to blow everybody out of the water with their outdoor production. I'm not saying that's going to happen. I'm saying that's what they plan on happening, and they believe this is a game changer, and outdoor cultivation will allow them to be one of the leading cannabis brands. So one of the things that I think is interesting about this opportunity is they are a relatively cheap stock, and that's kind of one of the big things that I looked at when I first started looking at this company. Here, I'll show you this. This just talks about the first shipment to the SQDC, so the Quebec Society de Quebec, which is just like the OCS in Ontario. So this talks about how today's shipment pertains to 120 kilograms of indoor cannabis, and they have agreed to supply 1,200 kilograms of cannabis to the SQDC, and that will be by the end of 2019, or at least by early next year. And as it says here, 48 North has committed approximately 5,000 kilograms of cannabis from its 3 facilities to provincial distributors in 2019. So by the end of 2019, they will purportedly to have sold 5,000 kilograms of cannabis from its 3 facilities, which is a pretty decent amount of cannabis. So, it's worthy to keep in mind, or at least to keep on your radar, right? And one of the big things about this stock is that it's currently trading at pretty decent rates, so you don't necessarily have to it's right here, 88 cents. So it's not necessarily a stock you need to dump, thousands and thousands of dollars into. It's a relatively cheap stock at 88 cents. Most investors, I think, can afford to throw a couple $100 and put it away. A stock like this, I think, is one of those that it has a lot of potential. It's been beaten down just like every other stock recently, but it's actually been one of the green stocks in a sea of red. So that just shows you that a lot of the things that the company is doing are good, but it's hard in the market today for any company to gain a lot of real support, and that's why you see such volatility, but this is also why it presents such opportunity. But like I said, you need to be aware of these things and you need to be smart as to when you're going to invest. We should wait to see how the market goes, but in the long run, I don't think you're going to be very unhappy if you were to invest in this company, because like I said, they are poised to become a very, very, very big player. And with their cost per gram at 25 cents, they can blow all of the competitors out of the competition, out of the water. It's not even going to be close, right? And this is why it's an interesting play. For 88 cents, I think you can definitely see a run up to at least, below $2 probably, if not above that, as soon as the market starts to run again, as soon as we see a lot more volume. This is going to be the big time for this company, as it says right now. Like, they're beginning their cultivation and they're opening up their 100-acre farm. So it's being planted now, and we're going to see production starting, obviously, when these plants can take time to grow. So it'll take a couple months at least before we see actual production out of this facility. But once it is, it's basically going to be a 1 year cycle. That's the thing. Like, it's only not going to be able to be grown all year, obviously. So you're only going to have probably one crop a year, which is a limiting factor, because most indoor facilities can produce up to 3, maybe even 4 crops, maybe even larger than that a year, right? Maybe they're 12, even 12. Maybe they're producing a crop a month because they've had things in such a way that they can produce consistently. But all I'm saying is that we need to be aware of what their cost per gram is, how much they're putting in, and how much they're able to build down their debt versus profit ratios. And so I think this company can be very profitable, which means in the long run it can be very successful. And I also think that they're targeting female kind of not only consumers but also investors and partners, and branding towards having kind of an empowering role for women, not only in the cannabis industry but also within the cannabis culture. And I think that gives them another added benefit because they have that niche portfolio, which that gives them access to kind of a very small investor market, and people maybe that are looking at different cannabis stocks and looking at all of the ones priced under $1. This one I think is one of the most, if not the most interesting, and probably will be one of the big winners because of these factors and because of their branding, because of their association with certain niche groups, and because of their high quality organic cannabis that's produced at the lowest cost in the country. We're going to see 48 North being able to substantially improve their market share, and hopefully, more than likely become one of the stable, if not very, very prominent cannabis brands in Canada. I don't know if they will match the production of a lot of the big producers. I don't think they'll see the same kind of numbers, but they're not focused on the same things. And I think that having their mind focused on lower production and producing outdoor cannabis that a lot of people are interested in, it's something that I think a lot of people, like I said in my last video, a lot of people are interested in having sun-grown cannabis as opposed to indoor grown cannabis. They think that the sun is the best way to grow, and it provides the best nutrients and maybe the best product in the end. I don't know. I'm just saying this is something that I've heard. So it's interesting that these guys are trying to do the same and provide a product that is going to be not only profitable but also fitting that niche market and supplying to those that are seeking out such products. So that's why I think 48 North will be a good investment, and why a lot of people should keep them on their radar, because they are going to be going forward looking to branch out and to push into different markets. As I said, they have kind of a female focused platform, and that's Latitude. It's a publication in which they try to empower women to provide stories and their experiences within the cannabis culture. And this mother and clone product and brand is a sublingual nano spray. So it's a spray that's going to be infused with THC. So it's 2.5 milligrams of THC. It is obviously just another way for you to ingest cannabis, and this is kind of a more niche, adding towards the more cosmetic health and wellness sections instead of the maybe more recreational sections of the market, whereas these Avidas premium vape cartridges are more towards the recreational, I would say more towards the even the medical field, and they will be THC, CBD filled probably eventually. These are cannabis oils, and they're pre-filled vape cartridges, which are very popular. So I think this is another big benefit to this company, and just shows their kind of focus on branding to those certain segments of the market that are very, very prominent and that are very in high demand, but yet are not being utilized by all the other producers because they're not really focused on finding those niche markets. They're just focused on having a large production base and having as much production as they can. Whereas I think a company like 48North is more focused on trying to build a brand and market towards a certain market that they can target, but that they can also just provide good product, and that will also bring people to their product, to their brand. So they have a very diverse way of approaching the market and of looking at how they're going to support their business in the future and where they're going to look to target. And also, like I said, their low cost per production is just outstanding. So I'm sorry this was a long video, or maybe I kind of went back and forth, but like I said, I've been sick all week, so I've been trying to get over this cold, and I just wanted to make a quick video for you guys because I haven't put out anything lately, and apologize if I was a little crazy sounding, but there's you go. There's another stock pick, and I'll be back at you in a few weeks with another one, or probably next week. Anyway, you guys have a good week. Take it easy.